Hello and welcome to India Reboot, a show on which we would debate, deliberate and discuss that what can be done to bring India back on the growth track. If by the time the economy had just about recovered from the impact of the first wave, the second wave has really hit us badly, both in terms of number and the impact of that on rural India. So what is the best way now to normalize the economy? How large is going to be the widespread impact of this second wave? And to understand the dynamics of retail lending in this kind of an environment, it gives me great pleasure to bring on board someone who markets and corporates always admire for his ability to create an enviable franchise like Bajaj Finserv and Bajaj Finance, the Chairman and Managing Director of Bajaj Finserv, Mr. Sanjiv Bajaj. Mr. Bajaj, fantastic to have you back on ET Now. Thank you for joining us. Hope all is well and everyone is safe and fine at home.
Yes, Nicole, thanks. And I hope the same is true with you as well. Thank you for inviting me. Happy to be here.
Well, thank you very much. Mr. Bajaj, the first wave was more about fear, and the second wave is more about numbers and the impact of it. In your understanding, how big could be the impact of the second wave to the economy and to the demand, and how different it is from the first wave?
Nikunj, the first wave was as much about fear as it was about tackling the unknown, because a lot less was known about the virus, its impact both on health as well as on the economy. And the actions that were taken with significantly less information available than today. Now, this time is different to that extent. If you see, we have seen over the last 6 to 8 weeks, more localized lockdowns rather than a full national lockdown like last time. To that extent, its impact on the economy will be lower. While the last 5 weeks has been in all the big cities reasonably shut, we are starting to see things open up in the last week, 10 days. Maharashtra has just announced a set of more liberalized measures with non-essential shops opening from today for at least half the day. And this helps trade pick up. This helps business pick up. We also have to be careful. We are still not out of this second wave. So we have to take all the necessary precautions. Also, the restructuring that RBI has permitted makes a lot of sense, because then you can apply the solution to where the problem is versus a more blanket moratorium that was done last time, which again had a lot of uncertainty. So the situation is different. It is, I would say, better. A lot depends now on how the country comes out of this second wave. What is the level of confidence? What is the level of speed? But as I said, the last at a country level, we know the last couple of weeks, and definitely where I sit in Pune, the last 10 days or so, things are looking much better.
But is it safe to assume, Mr. Bajaj, that given everyone has directly or indirectly felt the pain of the second wave and the fact that the rural India this time also has suffered, there would be a challenge. There would be a challenge in terms of demand, and there would be a greater challenge in terms of recovery and delinquency, especially retail end?
That is a fair point. While I believe that the economy will be less affected this time compared to last time, on the social side, people clearly have been affected a lot more. We have all seen people near and dear to us suffer. Many people have lost people as well. And that's why it's very important that the government, RBI has already taken the lead, create confidence in the current circumstances. One is by accelerating vaccinations, importing the ones that work in the developed world, expanding capacity over here. Now we know all this has been happening the last 4-6 weeks. The impact of that we will see from next month. Even in June, we have seen, which we've just started. I recently read Serum say that they are going to up their capacity and try and do 100 million doses. So we need to provide that confidence. Vaccines will do that, not just the availability, but the delivery. We need to get to at least 7 million vaccinations per day. The government is talking about 10 million by July. I hope we get there, but at least 7 million so that we can vaccinate our adult population by end of the year. And that will play a big difference. I also believe that, like the government came out with a bunch of fiscal measures for stimulus last year, and they've further expanded the scope of the support, to MSMEs, the ECLGS scheme just a couple of days back. We will need to expand the amount that is available as well, so that a combination of these measures, while it can't take away from some of the pain, but at least gets the economy going. To your point on rural India, yes, rural India this time is more hit than it was last time. We will see how the recovery has to take place. We have to pray once again to the rain gods to see that we have another normal monsoon, because a lot of that economy is driven by agriculture. It will require government support as well, especially for people at the lower end of the pyramid, like done last year, whether through food as well as through some income support. So it's again a combination of these factors that we saw last year. You need that right combination again this time.
Spoke to you last, that was at the IC forum. Things were different. The mood was upbeat, the demand was robust, corporates were looking at committing capital, some were committing capital to brownfield, some were committing capital to greenfield, some were committing capital to both. Right now that entire animal spirit seems to be missing. When do you think it will come back? Do you think we could reach that level of optimism, what we saw in March, very quickly?
I'm hopeful. I'm hopeful that this is going to be much faster than what it was last year. I believe that by the second half of June, states like Maharashtra, Delhi should be back and humming. They may not be humming at 95%, but they should be humming at 75, 80% of what they were doing earlier. You'll see Gujarat, you'll see parts of the south coming back by early July. And then we have to see the north and the east. So I do see this coming back faster than what it did last year. Clearly, as far as the corporate sector is concerned, you will see people add capacities when they're reasonably full with their existing capacity utilization. And some of that capacity additions had started. You will see those panning out in the coming quarters. Those that still had idle capacity will naturally wait. And that is where the government's program for investment in infrastructure, which even got announced over the last year and further in the budget, has to continue, because in these times that provides the primary stimulus, that provides that large-scale employment, that creates demand. So we have to get the wheels running again, and that government has to be the first way to do it, with the private sector following.
What can the private sector do which could be different? And how prepared is the private sector, God forbid, if there is a third wave?
That's a very relevant question, and everybody has become sensitive to the fact that we need to prepare better for the third wave. Naturally, at some level, your cases can exceed capacity, but we need to anticipate. And let me tell you the role that I think private sector can play along with the public sector, because you need that collaboration. And this will be to anticipate, to plan, to act, and to support in such situations. When I say anticipate, I mean we set up joint teams and we build the right tools and the models which can monitor and anticipate future healthcare crises. That's the first thing we have to be able to do. Second is then to plan additional capacity in healthcare infra, medical research in vaccines and medicines. We already known as the vaccine manufacturer of the world. Push that forward on the research side as well. Stockpiling of medicines and building both international and domestic alliances for support and procurement of all kinds of medicines. This has to be done under plan. Action. Here, I believe what we need is trigger-based localized action plans. And these should be based on a combination of positivity rates, hospital bed availability. There are experts who can guide us on that, and Maharashtra has just recently announced that. So that's at a city level. But these trigger-based action plans should then have a set of standard SOPs that people know what will open up, what will shut down, transparent to all citizens, and updated maybe weekly. So that as businesses, we know when things are getting worse, we know things are going to tighten up, we can anticipate when things are getting better. And if you give that information to the normal citizen, his own behavior will modify towards that. So that's on the action side. And finally, support employees, support their families, support the local community. If we each do that, and whether it is through medication, whether it is through vaccination drives, we need to do this all together. And I can tell you, at least as Bajaj Finserv and across our financial services companies, we've provided financial assistance to families of deceased employees, and which ranges from 1.5 times to 3 times their annual salary. In addition, education assistance of 2 lakhs per annum per child for 2 children up to graduation, and extended medical insurance for the family for 5 years. If we each do a bit, and different size companies can do this at different levels, but we will end up supporting as well. So I think this kind of a set of coordinated measures to anticipate, to plan, to act, and to support will prepare us for the next wave.
Well, everybody needs to do their own bit, plan, act, support, and also prepare. Mr. Bajaj, I'll talk about broader trends about the 2 businesses which you currently are involved with. While I would love to start with NBFC today, let me start with insurance. We understand that there's a big reboot in the insurance sector, largely because of the pandemic. The reinsurance premiums have gone higher. Suddenly, to insure yourself, Indians have to pay more premium. Is this a trend is this a permanent change, that insurance now will be more expensive, especially on the life and the health front?
The insurance business, Nikunj, goes through cycles. You have to keep in mind that insurance is a business where we pool risks. We take a little bit of money from a large number of people to be able to pay those that have those claims. And all insurance companies reinsure a large part of their risk with reinsurance companies internationally. Now, this pandemic has hurt the world. And as a result, understandably, claims have gone up, which means that reinsurance companies have suffered losses or have not made money. So they've increased their conditions and their rates, which automatically flows down to the insurance companies as well. At the same time, it's a very competitive industry. So you will go through a cycle where in the next couple of years, as things settle down, and I hope even by end of this year, things settle down, competition kicks in and rates start going down. So these are the cycles that you see. If you keep in mind what most individuals pay in terms of their annual premium, it is a fraction, it is 1%, 2% of what that claim amount can be when you have trouble. So while we each want to reduce every rupee that we can from what we pay, we must keep in mind that for that small amount that we pay to protect ourselves, it is important we do that to ensure that the protection is proper, it is timely when we need it.
Given that the dynamics of the insurance sector, Mr. Bajaj, are such that top 4 or 5 players, I could say 5 or 6 players at max, are actually making money. Some are there for purely trying to increase, trying to invest right now and then look for exit. Some are there because they are not finding any takers. How do you see the dynamics in terms of number of players, the size of the industry, the market share gain changing because of this pandemic? Like you've always said that the crisis always creates opportunity, but it always shakes out the weaker player.
Building businesses is interesting, but hard work. You've got, as you said, the top 5-6 companies. They've been there for a long time. They're there in most lines of business. They're making a reasonable amount of money. You have the next set of companies that came up. They thought they could take a part of that pie. They thought they could get their valuations up and sell out. But most have followed the same business strategy as the other larger companies. And that is disappointing because this is such a large country. And, Bajaj Finance, our other business, has shown how you can innovatively build a significant company in a crowded space. The digitization is going to make that difference and provide that opportunity to smaller companies, and even larger companies will drive change using that. I mean, in the last year, consumer behavior has changed so dramatically that we are seeing whether buying insurance policies, the simpler ones at least, is happening entirely digitally. The entire claim registration, claim handling is happening digitally. We have a smart assist tool where our agents can see the screen of the customer when they're on our app and help them through their entire process of evaluating and buying policies. Now, India is such a large country. Why isn't some company thinking of selling a large number of small ticket policies in rural India? Why isn't some companies saying that I will not have branches? I don't mind if I just sell to 500,000 customers. I'll be a small but a very profitable company that will be only digital. Opportunities exist, but we have to see a lot more innovation. We have to see a lot more hard work, and we have to see this focus on differentiation that our country allows us. The digital infrastructure that has been created in India in the last year, the JAM trinity that one talks about, can truly set us aside. And I hope we get to see that. At least my companies are all working on that.
Okay. The NBFC sector. Now, there are two changes which are evident. And you spoke about this one big change, which is where how fintech firms were trying to be NBFCs. Do you see that change accelerating more? Because there is no dearth of capital in the startup world. The number of unicorns which have taken a birth in last 12 months in India is extraordinary. Do you see this fintech trend only accelerating?
When we talk of fintech, we must keep in mind that there'll be those fintechs that will focus more on the technology side and will sell their product and solutions to large incumbents. There will be those that will use their technology as a platform to distribute financial products. And then there will be those that will also get a NBFC license to not only distribute products, but to manufacture them. And you will see all types, and that's what innovation should do. The important thing is that it's great to see private equity that has helped spawn a whole bunch of startups in India. But unlike most other private equity-led industries, lending, if you have to also manufacture the product and keep it on your own books, is a highly leveraged business. So as I had mentioned earlier also, Nikunj, the typical private equity model where, out of every 10 deals that you do, 2 or 3 are stars, 4 or 5 are okay, and 3 or 4 die, can't necessarily work with a leveraged business like an NBFC. You need to put in the time and hard work to build the risk model along with your technology model. You cannot go and buy just data from outside, and our data protection norms, which will come at some point of time, will make that correctly so more in the hands of the user. So it's a combination of these factors that will help decide how these companies do well. But to me, when I look at Bajaj Finance, we started off as an NBFC, but today we leverage technology more than most fintechs do. And you will see transformation of the next avatar of Bajaj Finance by the third quarter of this year, where we will hopefully, and I don't like normally to talk before we act, but we will hopefully show what a real fin plus tech should look like.
You prompted me to ask a follow-up question. So what should we expect in October?
At Bajaj Finance, and we've already announced this, as we get closer to our customers, our partners, digitally, we will see a combination of a app and a web-based environment, which will have a lending platform, digital platform. It will have an insurance platform. It will have an investment platform. It will have an e-commerce platform that supports our 100,000 retailers around the country. and it will have our own payment platform. You'll have each of these in place. Some of them have already started rolling out. The important thing is, how do these work intelligently together? This is what we will start rolling out from September or October this year. And we will see the power of that and the power of how we use data and analyze that to provide better solutions in a frictionless manner to customers come out. Our insurance companies will start leveraging some of those platforms themselves. And in addition to that, keeping in mind that customers don't want products, they want solutions. We are also in the process of building two new markets. We have Finserv markets, which is already live and gets a couple of million consumer views a month. And this is an open market platform where we've tied up with a number of banks, insurance companies, NBFCs to offer all kinds of financial products. We will open this up even for outside in due time, so it can be an open markets platform. And we are also working on the health solutions place with another business which we have recently launched in pilot mode called Finserv Health, which brings together not just insurance and finance, but it brings together doctors on a common platform. It brings together hospitals, it brings together labs, so that as consumers, when they have a medical issue, they see all this working in an integrated, smooth manner. It will take us a couple of years to build that. It's still in pilot stage, and that's why this is the first time I'm talking publicly about it, because it's available there other than at the launch time. So there is a lot that is happening across our group of companies. We're getting more and more digital with the intention of making life easier for our customers, for our partners, and our employees.
Well, you've given us a lot of hints, but I'll take the clock back and talk about a matrix which we had constructed exactly a year ago, and we used the words survive, revive, and flourish. And you said that Bajaj Finance and Bajaj Finserv, they've survived. They were in a revival mode. This year, does it belong to the flourish part, which is that you will come back strongly, and you will come back much better than what your peers are doing?
Well, I don't know about my peers. I wish them the best. This country needs multiple Bajaj Finances to succeed and to make sure financial services reaches everybody in the country. But yes, we are hopeful that the first quarter may be a bit muted, but from second quarter, as long as we get this vaccination drive going fast and hard and early, that things should start coming back. But the culture that we have built at our companies is the whole process of reinvention goes through every 3 to 5 years. Over the last 10 years, we've had enough periods where, as Bajaj Finance or as a general insurance company, we have been flourishing, but we go back to the drawing board. We scratch out everything that has worked for us in the past, and we find a new way to do business, a better way to do business going forward. This whole process of reinvention, every 3 to 5 years, you can't do it every year or two, but it is what keeps us going. It's what keeps the intellectual juices flowing. It's what empowers our team. That's the excitement of working at the Bajaj Finserv companies. And that's what gives us our best chance to see that we don't get complacent with our success. Our thrill is to keep building the new Bajaj Finance, the new Bajaj Allianz, the new Finserv markets every 3 to 5 years.
Okay, I won't get into specifics of what lies ahead, but just to wrap it up with one broad question in the way how dynamics are changing. Because of this pandemic crisis, what to your mind is a permanent change at the end of the customer or the borrower, and what to your mind is the big permanent change at the end of the lender? What are these two changes which have happened because of this pandemic crisis, and they are permanent?
So let me take this, Nikunj, at a broader level. And there are a few key changes that I see. One is just the importance of the digital world. This is making a very big difference with high consumer adoption over the last year across ages, across geographies. This has enabled our partners, to our intermediaries, to get themselves acclimatized with using digital tools. And of course, our employees continue to do that. So the digitization of the world, or the digital world, which will still be a hybrid model between some things that will be offline and some things online. But people need to get that correct. Second is a combination of a hybrid working model, working from home partly, doing bunch of meetings on VC, at the same time coming to office to collaborate. There are certain roles that need to be done from a physical world, getting that balance right. Third is uncertainty. We have seen uncertainty, we have seen the impact of this pandemic for an extended period of time. In none of our lives have we seen this earlier. And unfortunately, from what we read, these kind of occasions may come again. How do we prepare ourselves for that? Companies and we will need to be more watchful, build the right alert tools, but equally nimble, because you can't always forecast right. But if you're nimble enough to be able to change, like a palm tree in the storm versus a oak tree that falls, that's what we need to do. So to me, a combination of these three areas has definitely changed, and those businesses that adopt them will be ready for this coming future.
Well, what a brilliant insight. Really appreciate your time, Mr. Bajaj. Thank you very much for your valuable inputs, and thank you for guiding our viewers through what the key metrics of the lending business are, what are the permanent changes, and how India Inc. is currently prepared to handle the second and the third wave if it happens at all. Appreciate your time and stay safe, sir.
Thank you, Nikhil. You too.